I think that we might see if we had to tone down my forecast, I still think it's going to easily hit 3,000, possibly challenge 3,100 in a more challenging environment. In a more favorable environment for gold, it would barrel through 3,000 and not only challenge 3,100, but go in excess 3,150, shy of 3,200 per ounce. I don't think we would have seen gold spike as aggressively as it did. So if we get some resolution of conflict, which we all hope will happen, I think that the net effect to the rise of gold will be much more tempered because of the other conditions moving forward, which is the economic challenges, the inflation that seems to be persistent.
Gold is expected to reach at least $3,000 per ounce and could challenge $3,100 even in a complex environment. It may surpass $3,150 and approach $3,200 in a more favorable scenario. However, if global conflicts ease, the rise in gold prices will likely be more moderate. GaryWagner, a well-known precious metals expert and analyst, exposes gold's recent volatility. This volatility has been largely driven by the strength of the US dollar, which surged from 100 to 110, impacting currency markets. Additionally, when gold or any asset reaches record highs, short-term traders often take profits, especially toward year-end. Gary highlights that since October 2023, gold has risen from around $2,000 to $2,800, with a sharp $180 increase in just a month. This rapid ascent has changed the market dynamics, highlighting the speed and intensity of gold's recent gains. Gary recalls that, since 2019, gold has experienced periods of growth with notable corrections. From a base of $2,000 in late 2019, it climbed to $2,300 before undergoing multiple pullbacks, forming lower highs until late 2023. Gary explained, in October 2023, geopolitical tensions triggered a sharp rally, pushing gold from $2,000 to $2,500 within months. Recent corrections have become shallower, except for a significant pullback after gold hit a record high above $2,800. Historically, rapid parabolic gains are often followed by equally sharp declines. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments.
Yeah, I think one of the primary factors that has created this volatility in gold has been dollar strength. Recently, we've seen, in a very, very short-term basis, we've seen weakness, but the dollar has moved from approximately 100 up to about 110. And so that is a 10% increase in value of the dollar as it relates to the basket of currencies that the index composes. The euro is the heavily, they are not weighted equally. The euro, I believe, is 60%, but you've got the euro, the Swiss, the sterling, the Swiss krona. You've got currencies in there that are not performing as well. And it was dollar strength that really created a lot of the volatility. One. Two, whenever you tend to see any commodity or stock go to an all-time record high, there is a decent probability that your interim and shorter term traders are going to pull profits, especially as we get to the end of the year when they want to close their books down and report what they've done to their clients in terms of profits over the year. So we had a combination of that. The interesting that I'm seeing is really since October 2023, and that's when gold was trading just at around 2,000. We've seen a climb up about 1,800, 2,000 to 28. But what is most interesting is what we've seen really recently, which is this last rally that began at about 2,600 to about, now I'm looking at future pricing, and this is April, about 2,852. So we had about 170, now about $180 price ascent in gold in a short period of time of just about a month. And so that has changed the dynamics in terms of the speed at which we've seen gold's value not only increase or accelerate, but the compression of the timeline. We're going back to about 2019. I really want to focus in on the point. I believe it's right around here where we're 19, about $2,000. That is the end of December. 2019. It then moves up as high as 2,300. And during this period, you're actually getting respectable corrections. In other words, from 2,385 here down to about $2,000 in March of 21. It moves back up, but it is a lower high than the previous high, and then another deep correction. And then you get a lower high, but you get kind of a plateau at around 2,200, which takes us up to February of 2024, the real low coming in October 2023, and that is this dip here, because this is when I believe everything changed. We had the geopolitical environment got really hectic. We saw gold rise from what, $2,000, and within about a 4 to 5 month period of time, rise to 2,500. But the point that I'm trying to make is that if you look at the retracement from, call it, I'm going to round down, but a 2,250 down to 2,000, it's about a $250 correction. And you look at the correction, compare that to 2,250 down to 2,170. These corrections got much shallower. And so once we saw gold ramp up, and this, of course, is the record high above 2,800, that's really the only time recently, and when I say recently, I mean within the last year, where we've seen a respectable correction. A market that is overheating and moves up either parabolic or exceedingly quickly tends to come down just as fast. Parabolic up, parabolic down.
Gary suggests that over the past month, gold has experienced significant gains, with a sharp sell-off followed by a strong rally to new highs. Since October 2023, gold has surged from $2,000 to $2,500 in a 230-day rally, followed by another rapid $454 increase in just 22 days. Using Fibonacci extensions and Elliott wave analysis, the forecast suggests gold will continue rising in the first half to the third quarter of this year, surpassing $3,000 and potentially breaching $3,100. Gary points out that tech companies like Google, Tesla, Meta, and Apple, especially those at the forefront of AI innovation, are poised to continue outperforming the market. Their technological advancements, such as AI-driven medicine and protein development, will drive their growth. However, some sectors will perform adequately, while others may diminish due to disruptive technologies like AI and 3D printing. These innovations could revolutionize industries, but if not handled carefully, they could present risks. Despite this, specific sectors, particularly tech, are expected to outperform broader indices significantly. Now, let's shift our attention towards the interview.
The most impressive part is really what happened during the last week of December up to current pricing, because we're literally looking at a month in time in which we saw gold gain tremendous value. And that's just an area chart. We can really see what happened today. This week was phenomenal, by the way, because we had the sell-off that occurred on Monday, I think a $44 sell-off, and then today's tremendous rise, moving above recent tops. And so in terms of analyzing the marketplace itself, it gets to be very difficult to analyze how high a market could go when we're at all-time record highs. So I'm just trying to get a sense of the moves we've seen recently, and I've broken it down into a series of two rallies. I'm using Elliott Wave to accomplish that, but what I'm looking at is from October of 23, gold is sitting just at around 2,000. It runs up approximately $500, a 27% rise, and it did that in 230 days. And then corrected, we had a second leg of the rally, and on this rally, it took 122 days, and it increased at about $454. I simply averaged out these price moves, and then from the beginning of this current leg of the rally, I've done what's basically called a Fibonacci extension, which is how I have derived my projection. And this is for the first half to the third quarter of this year, and that is to see gold move substantially higher, when we talk about the S&P indices, it's such a broad-based group of different companies doing different things. I want to separate that from individual companies. So companies that are highly involved in tech, whether it's Google, OpenAI, whether it's Tesla, whether it's Meta, those that Magnificent Seven, Apple, they will continue to perform because the technology they are creating is outpacing the development of technology globally. They're the leaders and at the forefront of new items. The whole idea behind AI is if they actually can harness it for different types of medicines by developing proteins that have never happened. That's going to not only be exciting, but those stocks are going to continue to move higher and do so at a pace I think that will spin many analysts' heads. On the other hand, there's certain sectors that will perform on average adequately and some that will kind of diminish when we consider disruptive times, whether it's the horse to the car, the Industrial Revolution, points in which the way things were done for hundreds of years are no longer done that way. That kind of disruptive technology, 3D printing was one. AI is definitely one, and if they can continue to harness that and build it safely, if we're not going to go to a Terminator scenario, which I don't believe, or I pray we don't, but there's a lot of people much smarter than me saying that that's a possibility if we don't do things right. I tend to be an optimist, but that shows my ability to be naive. But certain sectors are going to continue to outperform gold, 5x, 10x.
While gold is poised for continued growth, driven by geopolitical factors and market dynamics, global conflict resolution may dampen its upward momentum. The forecast suggests gold could surpass $3,000, potentially breaching $3,100, especially if the current market environment remains favorable. Meanwhile, tech companies leading in AI and disruptive innovations will likely outperform other sectors, though there are risks if these technologies aren't managed carefully. How will geopolitical tensions influence gold prices in the coming months? What role do you believe AI-driven advancements will play in the future of technology stocks? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.